Speaking of the holiday spirit, I follow you on social media, Ryan. You were posting about the fact that we didn't get a Santa Claus rally the last 2 years, but we've never missed 3 in a row. It sounds like you're almost guaranteeing a Santa rally this year. You say these 7 days of the Santa rally that start tomorrow, technically, you clarified it, have the highest probability of being higher out of any other 7 days of the year. So are you predicting a Santa Claus rally is coming?
Yeah, I can't make guarantees, but no, Frank, we think it's likely. These next 7 days, again, starting tomorrow, higher more than 77% of the time. If you look at all the 7-day combinations out there, none are more likely to be higher. And then, like you lay on, we were lower the last 2 Santa Claus rallies. Markets did okay. Let's be clear there. But I think, it makes sense when you look at what you just talked about before it came on. Not a lot of volume, not honestly a lot of news. We still were oversold from, just last Wednesday. This upward bias we think makes sense. Last comment, again, we've never seen Santa not come 3 years in a row. Maybe this year could be the first. I don't think it will be. I think we probably get moved back to new highs, which, like you just said, aren't really that far away, and kind of put a cherry on top to the end of a pretty solid year for investors.
All right, Ryan, I know you have to hedge, but if you look on your social media account, you seem all but certain it's going to happen. Yeah. So I think a lot of people are waiting. Again, that period officially starts tomorrow. All right, yeah. I want to talk about something we just hit on a minute ago. The VIX actually at its year low. What does that do for some of the riskier parts of the market? Is it significant on a holiday shortened week?
It is significant. I think it makes sense. State the obvious, there's not a lot of volume going on. Historically, around holidays, there's little movement. I think that's where we are. At the same time, we're flirting with all-time highs. And you look historically, the VIX does tend to have kind of muted moves in December. I don't think it's too big of a shock. And the bottom line, I don't think it's bearish. I'll be very clear. Maybe if the VIX was down around 10 or something, maybe you get a little more concerned. But I think it makes sense when you look, not just U.S. I mean, you've been all over this, Frank. Globally, we're still seeing, new highs. We're still seeing a global bull market, and honestly, not a ton of volatility. Yes, there's more volatility in emerging markets, but developed markets, different parts of the world, things are pretty calm right here. And I think that's really a positive sign. I'd rather have a lower VIX than a higher VIX. Let's put it that way, because lower VIXs usually mean you're in a bullish trend, which I still think we're in.
All right, so I think we're in a bullish trend. We're going to get GDP later today. Yeah. What are your general thoughts about GDP? And I also want to talk to you about cyclicals. We're going to dig into materials a bit later in the show, but Raymond James out with a note basically saying we have to wait and see if the economic data supports a cyclicals rally, and cyclicals have been underperforming for the last 2 years, according to Raymond James. Obviously, financials hitting an all-time high. Does GDP, does that create a bigger rally in these cyclicals, whether it be financials, materials, industrials, just showing, if it meets estimates, of course, showing strength in the economy and giving investors the confidence to put their money in those sectors?
I think it will. Like you just said, the first half of this year, as everybody talked about, GDP up 2.2%. Half of that came from AI and CapEx. We get it. But the second half of this year, things have really broadened out, and that's a positive thing. I mean, we over 3% GDP growth second half of this year. Who really had that on their bingo card? Obviously, April, when we had all the tariff stuff going on. Now to get to kind of together, we do cyclicals, right? We're overweight equities, yes, but you look at industrials, financials, parts of technology. I know tech's had a big pullback, but it's starting to come back here. Those are areas we think that as this global economy does better and reaccelerates next year, we like. And then one more comment on this, look at something like copper, silver, palladium. I mean, it's hard for us to think those areas will be breaking out to multi-year highs or all-time highs if the global economy potentially wasn't reaccelerating. We think the market is sniffing out, again, better growth, and that's why we do like those cyclical areas over defenses as we head into 2026.
As you mentioned, gold and silver, again, hitting new all-time highs yesterday. Yeah. Is that a bullish sign for the U.S. markets, and you're talking about the global markets, or is that a more bullish sign for maybe developing markets or international markets, the fact that we're seeing that kind of rise in commodities?
Yeah, historically, when you have the strength in those particular more defensive commodities, it is more for emerging markets, right? Those do a little bit better. But I know I've been saying for a couple of years, came on with you saying, I think gold and stocks are going to go higher potentially for years. I mean, we were one of the few places back in 23 that said that, because they can. Go back in history. There's a 5 and 6 year period where gold and stocks go higher together. I think we're still, I think we're still in that. Bottom line, we own a little bit of gold in our more tactical models here at the Carson Group. I think it makes sense. Even some of our longer term strategic, we added earlier this year too. So it makes sense to have a little bit of gold here. And also one more thing, metals and mining, right? You look at silver, you look at copper, you look at steel. A lot of those names are doing very, very well. But one more comment, Frank, they're just now silver and copper are breaking out above levels that they were trading at years ago. So it's not as extended as gold. I think a lot of these other commodities play catch up to gold in 2026, and metals and mining is a nice way to play that.